morning and good afternoon. My name is Alexander Kafka and I'm pleased to moderate today's discussion. We are very grateful to the International Visegrad Fund for supporting this initiative. In our first webinar, we have examined how Visegrad Group has preserved practical cooperation despite political disagreements. And in the second session, we explored how academic, scientific, and environmental cooperation can function. And today, we turn to perhaps the most pragmatic dimension of all, business and economic cooperation. So let me turn to the first question. Is there an economic glue in the Visegrad Group? So what are the concrete structural factors that protect economic cooperation from political disruption? Does EU single market membership function as an automatic stabilizing framework?
My name is Gábor Furi, and a senior research fellow of ELTE Institute of World Economics from Budapest. And first of all, I would like to thank for your invitation, and I'm very glad to be here. Just one remark regarding the first or the second question. Regarding EU funds, so we cannot say that in case of Hungary, common EU market or EU funds and development programs can minimize the political risk, because in Hungary, regarding Hungary, the rule of law, it's a problem. So studies have shown that EU-funded projects in Hungary are frequently overpriced and used to fuel the government and its business relations, which strengthen the ruling party. So the EU funds and the EU money, it's against the minimize the political risk. But we have 3 cross-border cooperations between Hungary and Croatia, between Hungary and Serbia, which is a candidate country, and we had Interreg cross-border cooperation between Hungary and Austria. And this cross-border cooperation and cross-financing by EU funds, it's a very good basis on cooperation between not 2 countries, but 2 regions, which has traditional good connections before the 1945 and after the change after 1990s. So it's a pro and cons regarding the EU funds. Just this short remark.
Dora Piroska, please.
Yes, my name is Dora Piroska. I'm an associate professor at the International Relations Department at the Central European University. And thank you for the invitation. I specialize in banking and finance. So I'd like to share a few insights of Visegrad countries in this regard. You asked for an economic glue. So if there is an economic glue in banking, that's certainly Austrian banks. We see Austrian banks present in all 4 Visegrad countries. And the Austrian regulator is also very active in both gathering information, providing fantastic, very valuable economic research on the Visegrad countries, and providing forum of discussions for Visegrad for banking representatives in the Austrian Central Bank. So that's definitely something to think about when thinking about economic cooperation among the Visegrad countries, that is not necessarily policymakers or politics-driven, but actually business-driven cooperation. The economic structures of the Visegrad countries, the FDI-led growth model, hasn't changed so much in the last years, but have changed, and I see it in my research in banking and finance, is a more activist state involvement. All four countries, Poland, Czechia, Slovakia, and to the most extent actually Hungary, have been creating such policy intervention into banking that primarily helps channeling investment from banks to local businesses. These are sometimes more, sometimes less effective. The Hungarian case is definitely marked with rule of law violation and, outright corruption. But it doesn't it still puts these countries on a scale of increased state intervention in the economy. The reason for this increased state intervention is another glue that, of course, connects all these countries, EU membership, and the Commission's various reform attempts in the capital market integrations and the Savings and Investments Union, the latest attempt of the Commission to create or increase investments into European economies. Now, what unites V4 with regards to this EU initiative is that it absolutely misplaced. It's not tailored for Visegrad needs. The Visegrad countries' capital markets are underdeveloped, small. The local companies in these countries are tiny, tiny, small and medium-sized enterprises. The Commission's attempt to increase, investments through capital markets into tiny entrepreneurs is not leading anywhere, actually. So the increased state intervention in Visegrad countries in banking and finance, in my specialty, is definitely connected to the failing of the one-size-fits-all EU policy. So that's my intervention for now. Thank you.
Thank you. Very interesting indeed.
I just want to say that, of course, you should be an expert on Visegrad countries in order to go very deep into this question. But I think that definitely the political relations between Visegrad countries and also between Visegrad countries and other EU member states, they have, of course, impact on single market functioning. First of all, the disagreements between these countries or disagreements of these countries with other EU countries on political level may cause and usually has this kind of slowing of EU decision making. Would it be about adoption regulations? It's not only about the commodity market, for example, also labor market related issues, migration related issues, which also has impact on the labor market in the union. Many other topics having impact on the EU's functioning, EU's internal market functioning.
I know the Georgian banking sector is also represented through one of our participants.
Do you mean me or somebody else is here?
Yes.
My name is Nicolo Shurgaia. I would say that I'm a former banker for now. For last 2 years, I've been out of banking and I focus on resistance to the regime that we have in Georgia. Now, what I would say is that often it's as I observe, it's very difficult. Collaborations between neighbors go with difficulties because of, I don't know, prejudices probably and historical matters. So I'm really curious to see how these four countries find positive ways and positive, how they build bridges between each other.
Business as a stabilizing actor. When political rhetoric becomes confrontational, how does the private sector react? Have chambers of commerce, industry associations, or large investors actively worked to preserve regional cooperation? Is business in the V4 merely pragmatic? or has it sometimes acted as a moderating force?
We should highlight that the main players regarding the business or the trade within the Visegrad 4 are dominated by German companies, which acts as a primary economic hub and investment source for the region, as Piroshka mentioned, Ms. Piroshka, and there is the intra V4 trade is characterized by a strong interconnected manufacturing base, particularly in the automotive and the machinery sectors. So we are part of the intra-firm. So as a country, we are part, or as companies in Hungary or other V4 countries, as we are part of an intra-firm relations, intra-firm trade between the Volkswagen affiliates or BMW or Mercedes affiliates, but the main relation between these countries regarding automotive industry is the Volkswagen Group, which has several affiliates in the countries, and not only the inter-firm trade, but the international supply chains or international value-added chains, which are very important for these countries. And regarding the Chamber of Commerce, I know that the Polish-Hungarian Chamber of Commerce is very active, involved in this process. Relations between Hungarian and foreign companies in the region, or Polish and Hungarian companies, and there are many conferences and think tanks involving not only the business sector but the academic sector as well. So as Ms. Piroshka mentioned, the multinational companies, not only the banking sector but the automotive and machinery sector, have a very important role in the connection in an economic term between these V4 countries. I do not know examples that they have influence in the political terms. So I think these are two level, political level and economic level as well. The economic level are functioned very good. We have problem with the political level. And other issue that after the change, after 1990s, the main focus was these companies, the Western focus. So trade connections, business connection with EU companies, and after the EU accession, the main focus was the Western linkages. We do not care about internal linkages. For example, road and train connections. But I know that this is a further question, that which are the main issues regarding become stronger this connection.
Keep in mind the Georgian perspective on our discussion. Let's say if our region had a strong presence of, let's say, Austrian banks, or a strong presence of, I don't know, BMW or Mercedes-Benz, do you think it would serve as a stabilizing force during political instability? Or it might be seen as a threat to sovereignty?
This is my opinion, that there is no any threat to sovereignty, but unfortunately, our politicians actually their rhetoric somehow creates this kind of association, or this kind of perception that especially Western intervention would it be economic intervention or political influence, can be somehow damaging Georgian sovereignty. And in reality, it's not like that. But I think that I fear that there is also interest of certain Georgian financial players to support this kind of rhetoric and to make somehow not very much supported the full opening towards international markets.
I think Dr. Piroshka raised her hand.
I can intervene briefly. Again, sorry, my specialization is banking and finance, so I can talk. So you asked about what happens, how companies behave when the rhetoric becomes confrontational. So in Hungary, when the Orbán government came to power in 2010, the government pursued something which we call financial nationalism. It was an active attempt launched in various policy domains to regulate foreign-owned banks in a way that would redistribute their profits among larger segments of the population. This was, of course, right after the global financial crisis, and the banks have been profiting of this, of the buildup of the crisis. And after the crisis, the Hungarian banks, the foreign-owned Hungarian banks, were not very badly hit. So in a way, there was quite a bit of justification and legitimacy in the intervention of the Orbán government. However, the banks resisted and turned to the IMF and World Bank against the financial nationalist policies of the Orbán government. This was going on until 2015, roughly, when suddenly Erste Bank agreed with Orbán on a share of purchase of the share of the bank by the government. It became 15% state-owned. And after that, we've seen an appeasement between foreign-owned banks and the financial nationalist Orbán government, to the extent that since the COVID crisis, we can see the instrumentalization for political purposes of the banking sector, including foreign-owned banks. So what does this instrumentalization mean? Well, it means that the Orbán government's various policies supporting families or child rearing or housing market is advancing through bank loans as opposed to direct subsidies to citizens. Orbán government increasingly use banks, bank loans, subsidized bank loans to achieve its policy purposes, and the foreign banks benefit from these policies. So they are kind of willingly cooperate with the government in carrying out its policies. So that's kind of the curve, how they went from confrontational to become an instrument of the government. Thank you.
Hello again. My name is David DONDUA. I am a former Georgian diplomat, currently still diplomat, but on international position in Vienna, Austria. But here I am here as the chairman of the EU Awareness Center, a Brussels-based think tank focused on European integration, democratic resilience, and countering hybrid threats in Eastern Europe and South Caucasus. I would like to briefly respond to your last question, Alexander, the questions that you dropped about whether Orion or other reputable international European banks' presence in Georgia will be a stabilizing factor for the country. The general answer is definitely yes, and of course there is no threat for the sovereignty of the country whatsoever. But first, it does not work this way, that if international banks or international investors come to the country, they will ensure stability. It works other way around. First, we need stability, political stability, institutional stability in the country. That itself invites banks and other investors to the country. Banks can tolerate political debate, but what they cannot tolerate is legal uncertainty, and that's the main problem for us. And here, the most important confidence-building measure for Georgia, therefore, will be credible rule of law guarantees particularly regarding independent courts, arbitrage, property rights, and regulatory stability. So we have heard many times from a country's leadership, and not only in our country, but in some other countries as well, that in this challenging period, let's focus on economic cooperation, and through economic prosperity, ensure stability within the country. But stable institutions create economies, and not other way around. So we need political depolarization in order to ensure stability, and then invite Austrian or other banks into the country.
Our next questions are all about the transferability and the Georgian context. First, the preconditions question. What's the minimum institutional or regulatory stability required for business beyond politics to function? What is the single and most important confidence-building measure Georgia must secure to prevent capital flight and brain drain?
Regarding brain drain and secure the prevent capital flight, we have good examples. Finland and Estonia, for example, they invest to education and research and development. So their the base of the economic development was not extensive, but rather intensive. So it's problem of Hungary and Central European region, the so-called middle income trap. So we in the last 10 or 15 years, we built our economy by extensive, so increasing the employment, increasing the number of foreign companies, especially in the automotive industry, and we have now the battery manufacturing is nowadays a bad example of how we cannot, or how we should not increase the foreign direct investment. We know that this is just that situation in automotive industry in Europe, so it will be better figures in the future term, in the future. But we should focus on education, not only the university level, but the basic school level as well. So we have very bad PISA results. So you should see which are the countries which have the best PISA results. It's an international comparison between the countries. So there are good examples, Finland and Estonia, and there are new international brands. So we should see in the last 10 or 15 years, do any Hungarian startups can become a global startup or not. So you should follow us, and you should follow Finland and Estonia, which are good examples, and see what the problem in Hungary. So that's our most important things regarding the brain drain and the high value added manufacturing activities.
I would like to drop a couple of more questions. Could the economic pragmatism in Georgia help rebuild national cohesion? Can cross-border business success gradually reduce polarization?
I'm from Slovakia. I'm from Bratislava, and Slovakia is an example of a former economic tiger in the 90s after we became members of EU, and then we witnessed the gradual decline. And today it's a country suffering with huge brain drain and huge, and especially the young athletes who leave Slovakia continuously for many years. And so the question is, while in the moment when you have the dynamic of a government that is more focused on self-immunity, what are the chances that the economy could still go on?
I will try to comment. We've been very sure that democratic governance has much more possibilities for development, and it provides ground for faster and better development of the society in general, and economy first of all. Now we see that many authoritarian systems rise. We've achieved certain level of equilibrium in this sense, and they are able to provide fast economic growth. So there should be some reconsideration at this regard. If authoritarian systems or authoritarian rulers really think long term, then they provide a ground for economic expansions as well. So this is very debatable question if democracy is I would say it's more competitive in economic terms than any other system.
I would like to propose one final question. What is the most important economic lesson Georgia should take from Visegrad experience?
I think that you should focus not only the Western direction, so increasing export to the developed countries, but you should focus more on the interrelations, cross-border relations, and regional trade. So if you want to competitive companies which can be successful in Western markets, first you should see how competitive they are they in the border countries, I think. And it's I think the economic cooperation level, it's not always relations with the political relations between the countries.
Dr. Piroshka, please.
Thank you. Just very briefly, I would recommend not to focus only on economic growth, but create the democratic channels through which the losers of economic growth can advance their grievances and find democratic solutions for those grievances. I think this is very, very important lesson, especially from Hungary, because very rapid economic growth in the 1990s created many losers. And within the liberal political settings, there were very few, not enough, certainly, channels through which these grievances could be channeled, and then they were channeled to the far right. So in order to avoid these kind of populist and far-right parties' strengths and strengthening, I would definitely recommend building out channels of feedbacks for those who come out as losers of economic growth.
Let me add that I think it's extremely useful. So let me thank everybody for participation and extend my welcome and invitation for you to join our next event. Thank you very much.
Thank you.
Thank
you,
you
Alexander.
so
Thank
much.
you, everyone.
Thank you, Alexander. Thank you.